What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you go to coinmastery.com/invest. Put in your first name and email address. I can send you free PDFs all about dollar cost averaging, some strategies, especially for people who are just getting into crypto. This can be very helpful, help you make better decisions so that you can take advantage of this Wild West insanity. Wow. Today, what we're talking about is Bitcoin, what's going on with Bitcoin. We talk a little bit about Litecoin and how Litecoin's kind of recent surge this morning. But more importantly, I want to talk about two big things. One, the futures market, because it's going live this weekend. Two, I want to do a walkthrough of trading. Should you be trading Bitcoin pairs or USD prices? I should say Bitcoin prices or USD prices. This is seemingly a big point of confusion for a lot of people. I've got a whole keynote thing. We're going to walk through it. By the end of this, you'll have a very good idea of whether or not you should be trading as Bitcoin or US dollars. All right. So we're going to run through this. It's been a crazy week. This has just been like, man, you can't make this stuff up. So we're looking at Bitcoin right now, the 30-minute Bitcoin. And I think what's actually really helpful is if we look at the one-day candles, often that's a good, a good perspective. And you can see that I drew this fib starting with the last quote-unquote dip, right? The one that happened right around 5,600, and it's going up. And I'm using the wicks of these candles. Again, this is just as a guideline. These are by no means fully accurate or anything like that. But I think what is interesting is when we see these candles closing, especially this daily candle, where it closes will be an indicator of what the next trend is going to be. Typically, without knowing every tiny detail of technical analysis, if this candle as red, which is called a bearish candle, if it's bigger than the previous day, it's called a bearish engulfing, so to speak. That is a bearish reversal signal. If the candle itself does not exceed the green candle from the previous day, it has not activated a full-out bearish reversal, meaning this could just be a consolidation, and we could continue going up. These are loose, top-level fundamentals that confuse me just as much as it confuses a lot of other people, but that, from all my research, seems to be what the kind of the bigger perspective is telling you. Now, when you zoom in, when we go to the 30 minutes, I think it's helpful to look at this because you can start to see, we go to 1 hour just to make it a little wider. You can start to see some of these levels having a bit of an impact, right? Specifically, this 68. Scroll out here. This 61.8, I should say, where last night we saw all the volume picking up. We really the price start to drop. We saw a big dip. This mini candle came up, supported it, and we're seeing something else. This is a support line, right? There was obviously a clear amount of support that kept this thing from moving up, possibly because a lot of people were looking at this same line. It's kind of a self-fulfilling prophecy. So as we watch this, you want to be watching along these types of lines. And I would encourage you guys to go on twitter.com/CarterThomas. Go to the people I'm following. And there are plenty of good people who put up awesome charts that can do this better than I can. This is just as an intro guide level. The way I look at this is that I don't start buying stuff until it gets to the 50% fib, because that's when the risk reward looks good for me. I just let these things do what they're going to do and then dollar cost average all the time. Now, if you move this trend line up to the most recent dip, it can change. But right now, I was looking at 1440 last night. It didn't have enough. The volume just wasn't there to make me believe that that's the end of the story. I've got some ideas around 12.6, but if this daily candle doesn't close bigger than the previous daily candle, man, we could have another just crazy weekend, and that would be wild. Let's flip over to CoinMarketCap. If you don't know, maybe I'll just flip into this first. One of the big reasons why everyone thinks, or not everyone, one of the leading theories at why there is a big run-up right now is that on Sunday at 5 o'clock, I believe it's 5 o'clock Eastern, the CBOE futures markets will go live, meaning that they can start trading futures markets. CME, which is much bigger, much more, that's the real one. That's on the 18th. That's 8 days later. So my theory, which this is from talking to a good amount of people in the finance industry and also from reading a lot of different posts and a lot of different theories, this is the one that seems to be the most logical. Whether or not it's the right one, I don't know. But they're big buyers that are eating up the Bitcoin this week. So not necessarily the traders, but just the institutions, the banks, funds, whales, anybody is just buying Bitcoin up right now. On Sunday, as this price is very, very high and people finally own some Bitcoin, the futures market launches. The futures traders, which inevitably are tied to many of these whales, put out big short positions. What this means is that they're not betting their own Bitcoin. There is a secondary cash market, cash settled market, where they can say, all right, in January, on January 10th, 2018, I will agree to buy the price of Bitcoin at, let's say, $9,000. That is a short position. Now, they don't actually have to do it, but they have the option to buy it at that price. Loosely speaking, depending on how the futures are constructed, how the contracts are written. And they can only buy 5 of these contracts in bulk, meaning they can't take out $1 billion short yet, right? That's going to change, but for now. So they're going to do this. When they do this, it's going to be across every headline in every mainstream media. There's going to be a lot of pressure from government. Like, a lot of stuff is going to start to happen, and it's going to put a lot of pressure onto that, onto the price of Bitcoin to move it down. Because very powerful people want the price to go down. Guess what? They're going to find ways to make it go down. They're going to come out and go on the front page of the newspaper and on TV and publicly declare that this is terrorist activity and it's the worst thing in the world and the government should outlaw this. That's the kind of stuff that can drive the price down without owning any Bitcoin. And I can tell you one thing. Do not underestimate how easily people will sell things when they're scared. It's easy for us to be like, oh, I'm holding no matter what. Nothing's ever good. Emotions are powerful, right? It's easy for things to start slipping for people to be like, I'm just taking my profits. I'm good. I got my money. I'm great. So they take out these big short positions. They spread the fear. It comes the tail wagging the dog. The price starts to come down of Bitcoin, right? Maybe they buy some dips, they go away for Christmas break. They might buy some more dips. They settle the January 2018 contracts, meaning they either buy them or they don't, whatever the price looks like. But now they own all this Bitcoin. And if they settle the price low enough to their contracts, they make money on the short position. And now they can go long as hell on Bitcoin. They can say this is going up to 30,000 and everybody's like, oh, wow, Bitcoin's back or whatever. And maybe it goes up to 18 again, and then they do the exact same thing. And they can do this over and over and over. And it's really powerful when you have the kind of money and the kind of horsepower that these guys have, and the technology and the skills and the experience. So even though it may seem like BTC has some sort of protective shield because these are cash settled futures contracts, fear and emotion and the ability to coordinate large-scale FUD campaigns to drive price is very, very powerful in bubble situations, speculative situations, especially when people are in here to make money, for the most part. There's obviously people that love the tech, the believers. I would consider myself 50% in that camp, 50% profit maximalist. But it's important to keep that in mind. So I think that's why this price is going up. Does that mean you should take your profits now? I don't know, to be perfectly honest. I'm here to to let it ride. If this thing goes down to 5,000, I don't care. I mean, it sucks, but I believe in this over the next 5 years. I have no intention of scalping this, especially in December. But that's where I'm standing. I think that plenty of other people. One of the best things you can do, if you own $5,000 worth of Bitcoin and you're on the fence, do $500. Sell $500. It'll release that feeling of, what do I do? What do I do? Just do a little bit. It's not financial advice, by the way. This is never financial advice. It's just my opinion. Other piece of news that's interesting as it relates over on Bitcoin, which is really where we're going to be spending most of our time talking, is when you look at these Korean markets. Now, the arbitrage is coming down on Korea, but there was a huge surge in the Korean markets. We talked about this yesterday a little bit. Now, they did ban, or they are looking like they're going to ban futures trading in South Korea. Now it looks like they may do a full ban on crypto exchanges, which may be driving a lot of this price as well. So this is a big macro force that can drive this. The futures trading is less of macro. That's more of just like the market dynamics. But all these together can play into a feeling of, I've just got to get some Bitcoin now before things hit the fan. Do you do that, or do you wait till the fan hits and it either goes down and you can buy it cheaper, or you miss the boat and you got to buy it more expensive? That's why I don't know. I think this is more about game theory than anything else. And there's no right or wrong in game theory. Game theory is how you manage probabilities, and in this case, how you manage risk. When you're using money. But so it goes. And I wish I had an exact answer other than 12.6 is the fib level I'm looking at. I won't go all in. I'll start layering them, and then if it gets down to 10, I'll layer more. And if it gets down below that, then I'm like really going to start buying in. But that's it. That's what it is. Now, Litecoin had an interesting thing. You guys remember on that live stream yesterday, I talked about Litecoin and how I was really excited because they were starting to roll out their marketing, which was exciting. Similarly, Charlie Lee went on Glenn Beck yesterday. If you didn't watch this, I think it's really good. I don't know, however you feel about Glenn Beck, whatever. But what I did like about Glenn Beck is that he is clearly a skeptic, and he's kind of got this idea of what I think a lot of people have, which is, what the heck is this thing? Are you kidding me? How is this real? But he's trying to be open-minded. He's trying to understand where people like Charlie and the rest of us are really coming from so that he can make better decisions. So for that, I think it's helpful to watch. But when you watch this video, you get a really, it shows you how much of a communication, not problem, but people are just, they're two different worlds. And I think that is going to be a big thing that if Litecoin can solve, if they can find a way to tell their story more effectively as a lighter version of Bitcoin, as a more flexible, cheaper, faster version of Bitcoin. If they can paint that picture, and then two people like Glenn Beck and CNBC and everyone else, people that may not understand how this all works yet, that's going to drive this price a lot. So I think between it being the cheapest thing on Coinbase, and if they can figure out the marketing as it relates to how do we talk to the people that don't understand blockchain or do not understand Litecoin versus Bitcoin yet, Litecoin looks good to me for a while. I think this is going to be at least a 6 to 12 month play unfolding. Now, I want to spend the rest of the time talking about US dollars versus BTC, because I think that this will help people more than anything else I could really talk about right now. So I'm just going to move the windows, glass of water. This comes up when people have US dollars or they have Bitcoin and they're looking at altcoins and they're trying to see the ups and downs in the price, and they're trying to determine what is, am I losing money? Am I not losing money? For example, let's just pull this up here. Like if you go to Bittrex, you go to the markets, and on any given day, you go here and you look at Ethereum, for example, and it says that the Satoshi price is up 13.7% from yesterday, 24 hours ago. And then you hover over it and you see the US dollar amount has gone up much more. The question is, do you trade against this Satoshi price or do you trade against the US dollar price? Because in US dollar terms, maybe you made some money, but in the Satoshi terms, it looks like you just got worked. And how do you resolve that? How do you trade against that? What's the best way to do it? So that's what I want to talk about. Help you make better decisions around that, and just be better informed, right? This is not financial advice. I got to put the disclaimer in. Please make sure you read this. But that's, whatever. Okay. I'm going to move my face down a little bit just so you guys get a better picture. I think it looks kind of weird, but whatever. This is a representation of the ecosystem. If you're listening on the podcast, I would encourage you to go watch the video at some point. Scroll to this point. It's just going to help you. The visual is going to help you a lot. The blue box that's encompassing everything else is what I would consider fiat currency. And that is, I wouldn't say rock solid, but it's more stable than almost anything else. US dollars, euros, yuan, whatever it is. Inside the blue box is Bitcoin, which is the orange box. Now, Bitcoin is a little bit less stable. It's a lot less stable, but it's more stable than an altcoin. And for this particular example, I'm using Stellar Lumens because I own a bunch of Stellar Lumens and I want you to go buy 1 million of them. Just kidding. But it's just an altcoin example. So we use this inside. So the further into here you get, the more volatile it gets. Now, all right, so do you guys see what I'm saying? Fiat, this is your $1,000 US. This is a Bitcoin. This is an altcoin. When you look at the pricing, you're going to look at Bitcoin is only related to the box that's outside of it right now. So right now, let's say Bitcoin is worth $15,000. Altcoin is, if you looked at the fiat price, let's say it's 10 cents or whatever it may be, and the Bitcoin price is 35 Satoshis. These aren't accurate. I'm just using this for an example because there's two prices, right? There's against the big box and then there's against the little box, because altcoins, as of now, as of December 2017, are not really pegged to fiat currency. When you go to Coinbase, when you go to Gemini, when you go to Zappa, when you go to any of these exchanges, you can really only buy a few things with fiat, mostly Bitcoin. And then you take Bitcoin and then you go buy altcoins. That's going to change over the next 12 months, which is going to change the strategy. But for the next 6 months, this is how to do it. All right. So there's really two prices for the altcoins. There's one price for Bitcoin. Fiat is what it is. Scenario number one. Okay. Just, you see the visual here? Fiat stays the same. Stellar Lumens, altcoin stays the same, but Bitcoin moves up. If that happens, let's say Bitcoin's new fiat price is 1,700. Altcoin, it stays the same. It has not moved relative to fiat. See? You see the blue versus purple, pink, whatever? It has not moved. Therefore, US dollars has not moved. But it has moved in relation to Bitcoin. So it's cheaper, or it's worth less as it relates to Bitcoin. So if this is where it was, this is where it is now, it's gone down in price. Now, similarly, if Bitcoin goes up and then this is the price you buy at, and then the altcoin goes up, let's say some good news comes out about your altcoin and it beats Bitcoin's price movements, in this case upwards, it is now worth, let's say, 13 cents because it's moved up against the blue fiat. It's also moved up against Bitcoin. It's moved up against both. So it's worth more US and it's worth more against Bitcoin. That is why altcoins can give you the highest ups and the biggest downs, right? Because it has two things that it is pegged against. It is pegged against a moving target that is pegged against a not moving target. And then the third situation is that Bitcoin goes down, right? And that your altcoin, in this case, doesn't. Where Bitcoin drops down to 1,400, the US price of your altcoin may stay the same, but the Satoshi price may go up if it hovers around here. It may not, but that's the third situation. So this is often what you see in like bear markets, is that the US dollar amount doesn't really change, but the Satoshis. So if you go over to Bittrex on a day like today, the Satoshi prices are going up, but the US dollar prices aren't really moving. That's what's happening here, right? As opposed to when altcoins move faster than Bitcoin, things like that. Right? So you should maybe watch this again if you just want to look through the different scenarios. But this is what's happening right now, is that Bitcoin's moving faster than the altcoins can move. And then when the altcoins move faster than Bitcoin, it wins. Now, so the question is, what do you trade against? When you're looking at these altcoins, do you trade against the US dollar, how this is relative to the blue box, or do you trade how it's relative to the orange box? Now, the first thing is everyone's going to give you a different answer. And the more of a trader somebody is, the more they're going to tell you trade against Satoshis. But the only question you really need to ask yourself, if you have $1,000 and you want to invest in the market, if you want to trade, the question is, will this beat Bitcoin? Because no matter what the situation is, no matter if going up, down, if you're trading Satoshis, US dollars, the only reason why people trade against Bitcoin is because they want to maximize, they want to make more Bitcoin, right? They want to find coins that are going to move faster than Bitcoin will so that they can increase their Bitcoin positions. So when you are making a trade, if you believe it's going to beat Bitcoin, you will trade in Satoshis, right? And so here's what it comes down to. You trade against the Bitcoin price, the Satoshi price, to beat the market, assuming the market is Bitcoin. You trade against the US dollar price when their goal is to acquire more fiat and not to acquire more Bitcoin. So if you are in crypto and you're thinking to yourself, okay, I want to increase my Bitcoin portfolio, great. All you should care about this is Satoshi price. And that's a hard game to win, but it's very possible. Get good information, you invest the right times, the right coins, everything. And you can beat Bitcoin, you will get more Bitcoin as a result. That is what pro traders are doing in this space. That's why they will always say you only trade against Satoshis, because realistically, if you can't beat Bitcoin, you should just be holding it. Now, if you are less concerned about Bitcoin and you're thinking to yourself, I'm just in this because I want to buy coins I really like and I want to learn a lot, and I want to beat like the Vanguard index fund that I have. I don't really care about getting more Bitcoin. Then you can trade against the US dollar price. That is a way to gauge, looking back at this, that is a way to gauge that you are improving. All you care about is how this blue box relates to, or this purple box relates to this blue box. And this would be a lot better if it was like a motion graphic. I get it, but I'm doing what I can with Keynote here. So finally, it is simply a bet that you will exceed BTC returns in a certain amount of time. Otherwise, you should just own or hold Bitcoin. Yes, I spelled that HODL. For anybody who doesn't know, go look it up. All right. So let me put it this way. If you are not trading against Satoshis, you're better off just holding Bitcoin. If you are looking at US dollar amounts and you are trying to trade, you're kind of shooting yourself in the foot. So that's that's the long and short of it. For most people, it's better to hold a majority and trade with a little bit where you get some good information or you get a good strategy or whatever. But holding Bitcoin as it's been for the last, let's say, year or so, has been the better trade. All this being said, in 6 months, if and when Coinbase, Gemini, Zappa, all these fiat exchanges start offering 30, 40, 50 altcoins, so you can go US to alt, and this pegging starts to change, not everything is paired to BTC, this statement is going to change as well. It's not going to just be about should you hold Bitcoin or should you trade against Bitcoin. This is all going to change, all the market dynamics, the price, meaning Bitcoin could go way up and down, but the altcoin could go, it's going to do what it does. Same way Apple can go up and Netflix can go down the same time, versus if it was all pegged to Apple, it would be a different story. So I hope this helps you. If nothing else, remember this. If you are trying to trade against Satoshis. If you don't do that, you're better off just holding on to Bitcoin. Okay? Cool. With that, Friday, TGIF. I hope you guys have a great weekend. I'll be all on Twitter most of the time. Definitely on Sunday, 5 o'clock Eastern. I'll update you on the exact time. So keep an eye out for some price movements. And I hope you guys have a great weekend. Peace out.